Okay, so as I've said on the channel before, AI is very impressive technology. However, some of the companies running the show are not doing very well financially. Some of them haven't turned a profit, and the path to profitability is not really looking like it's going to be there, especially with the high operating costs of maintaining LLMs. And of course, the top company on my list of companies that are being run very poorly financially speaking is none other than OpenAI, the creator of ChatGPT, and they are in the news again today. An article from Reuters, I'll have a link in a pinned comment down below. But OpenAI is offering private equity firms a better deal than rival AI company Anthropic, as they're both looking to bring in more investor capital from private investors. So OpenAI's deal, they are offering preferred equity stakes to these private equity firms with a guaranteed minimum return of 17.5%. I mean, could you imagine? That's an insane return on investment. And for a company that is not turning a profit yet, and does not appear that they will be turning a profit anytime soon. Whenever they've been asked this question in interviews, usually the answer is very vague, or they just kind of try to change the subject. Oftentimes they might quote that, oh, well, the high demand for ChatGPT for our products is what's going to drive up the revenue, which will then ultimately lead to profitability. But the irony is that the higher the demand, the higher the operating costs. So just because you're able to generate more revenue doesn't necessarily mean you're going to be able to generate a profit. And from the leaked inside information and from what OpenAI has shared publicly, the company appears to have operated at a net loss in 2025 of somewhere in the ballpark of $8 to $12 billion. I do not have a source on that. That's again, and it's just no one knows the exact number except for people working at OpenAI. But if you were to just Google search right now or what have you, or use ChatGPT yourself to ask the question, you will see, yes, they haven't turned a profit from all the information that can be gathered publicly so far. And again, let me just clarify, this is not financial advice. I'm not a financial advisor. I'm not a professional investor either. This video is for educational and entertainment purposes only. I'm just sharing my opinion. Don't be making investment decisions based on what I say in this video. Do your own due diligence. And just, I am a very negative Nancy when it comes to the way AI companies are being run financially. And this story today about OpenAI's offer to private equity firms just is like the cherry on top, because to me, how this looks is trying to just grasp at any straws possible to try to really reel in private investors before the IPO later this year. This seems, in my mind, a little bit desperate and a little bit confusing because, again, if you look at the data we know right now, I just don't see it. I really just don't see it. This seems like a desperate play to me. And apparently I'm not the only one that thinks that way, because later in this article from Reuters, they did quote that at least 2 firms have said or have decided that they're not going to participate, actually not even just in OpenAI, but in Anthropic's offers as well, citing concerns, as quoted by the article, about the economics, flexibility, and profit profile of the partnerships. I mean, it's clear as day. They're concerned about that the profitability is not there, that these companies it's not a good business move and not a good idea to partner with either OpenAI or Anthropic. Of course, OpenAI with these large, guarantees, 17.5%. I mean, think about that. Preferred stock, by the way, for anyone that doesn't know, preferred stock, generally speaking, you don't get any voting rights when it comes to the board and what have you. But at the same time, you also tend to get your return on investment before the company takes a profit. That's the idea. That's why it's called preferred equity. Again, just generally speaking, I'll share a link to an Investopedia article where you can read more about preferred stock in the comments, in the pinned comment, I should say, down below. But anyways, that being said, yeah, so all in all, OpenAI, again, just making moves, trying to bring in more investor capital, doing whatever it takes. And, I just, again, clearly a lot of desperate plays recently. A few weeks ago or so, it came out that OpenAI was going to start implementing ads into ChatGPT. And that was something that the CEO, Sam Altman, said a couple years ago that they would never consider for ChatGPT. And well, look now we're throwing in ads into the LLMs. And, the thing is scary really about putting ads into LLMs. It scares me anyways. I guess this isn't so much financial talk as it is societal and consumer talk now, but at least when you get ads on a YouTube video or you get ads watching TV, like commercials or ads on radio or ads on a podcast, they're ads. I mean, it's clear as day stated this is an ad. But when you have it integrated into an LLM like ChatGPT or Google Gemini or what have you, I mean, how do you know that it's not just baked into the answer to the question or the conversation that you're having with ChatGPT or with Gemini? And that's pretty scary. I don't know that there's really a legal precedence for that. But anyways, not to get too far off track, getting back to the financial discussion of it all, I don't think it's a good business move. Clearly, some other firms are seeing it the same way. Let me know what you think in the comments down below, and click on one of the videos on your screen now for some more commentary.